Channel bumper. If you want the cleanest signal in space stocks right now, stop staring at charts and start watching factories. Because today, AST SpaceMobile just gave us the most important kind of update you can get in a pre-revenue space build-out. Not a hype tweet, not a concept render, a real-world manufacturing expansion that local government is literally voting on. Quick disclaimer, nothing in this video is financial advice. This is for educational and entertainment purposes only. I'm not your financial advisor. Do your own research. Here's the setup. AST SpaceMobile, ticker ASTS, is trading around $68.82. Rocket Lab, ticker RKLB, is trading around $7.81. And if you've been watching this sector since the SpaceX IPO era started, you already know the vibe. The whole space stock universe got hit with a brutal capital rotation, while the underlying space missions didn't suddenly stop being real. That's why I keep repeating the same line. The fundamentals didn't change, only the price did. Now today's #1 story is ASTS, because a Texas development group in Midland is set to consider a $150 million economic development agreement tied to AST SpaceMobile expanding satellite manufacturing at the Midland Spaceport Business Park. Let me translate why that matters for investors. A company like ASTS doesn't win by doing just a satellite. It wins by doing the boring thing perfectly over and over. Build hardware reliably, build it faster each month, build it cheaper each month, and hit a cadence where the constellation actually becomes a product. So when you see a potential $150 million local incentive package connected to manufacturing scale, you're basically looking at a signal that the ramp is getting real. And that's happening while ASTS is also saying BlueBird 11 reached Cape Canaveral, and the next orbital launch is imminent. That's the compression trade, manufacturing scale-up plus launch cadence in the same window. Let's do the space briefing in plain English. #1. What is BlueBird 11 and why should you care? AST's BlueBird satellites are not cute little CubeSats. They're basically giant space cell towers. The reason this story is even investable is because the satellites are designed to connect directly to normal phones with no specialized dish. AST has been talking about the next wave, BlueBirds 11, 12, and 13, as meaningfully upgraded, with around 2,400 square feet of array area and roughly 2x peak data speed versus the first generation. So if BlueBird 11 is already at the Cape, the next major binary event is obvious. Launch, plus on-orbit deploy, plus does it talk to phones the way we expect?
2. Why manufacturing is the real bottleneck. Everybody gets excited about launch day, but the truth is, for a constellation business, launch is just the moving truck. The real question is, can you build enough satellites fast enough with quality control good enough to actually fill the sky? This is where the Midland facility story matters. If you're aiming for a target like 45 satellites by year-end, your constraint isn't do rockets exist. Your constraint is production throughput. And incentives tied to a facility expansion usually show up when the local area believes the company is serious, the timeline is close enough to bet jobs on it, and the economic development math works. 3. The sector context. Why prices can move without the space story changing. The SpaceX IPO created a new gravity well. It didn't just create a new stock, it created a new default choice for space exposure. So even if you like ASTS, RKLB, or a space ETF, money can still rotate out of them into the big shiny new thing. That's why you can see 30 to 50% drawdowns across the sector while launch schedules still happen, contracts still get awarded, factories still expand, and the technical milestones still march forward. The market is not always voting on mission success. Sometimes it's just voting on where can I park capital today. Now let's talk implications. Implication #1. A factory update is a valuation update. This is underrated. In early-stage space names, the market is trying to price an S-curve. If ASTS can build satellites at scale, the story changes from cool demo, maybe someday, into okay, this is turning into a real network. That kind of shift can re-rate a stock faster than any single press release. Implication #2. You're trading a timeline. Space investing is basically timeline investing. If you believe BlueBird 11 launches soon, the next-gen performance is real, and manufacturing ramps without ugly surprises, then dips created by broad sector rotations can become opportunity zones. But if the timeline slips, the stock can get punished even if the long-term idea survives. Implication number 3. Watch the SPCX pressure as a sentiment barometer. A lot of people ask me, why does the whole sector move together? Because in public markets, space stocks often trade like a basket. If SPCX is weak, sometimes capital hunts elsewhere. If SPCX is strong, it can pull oxygen from the room. So even though we can't buy SpaceX directly like a normal company used to be, the SpaceX tracking trade is still a sentiment engine. Options check, no Greek soup. If you're an options person, here's the simple way to think about it. This is a catalyst window. Catalyst windows usually mean options get more expensive, premiums rise,
and the stock can whip around even if the final outcome is fine. So instead of trying to be a hero, you can think in 3 buckets. 1, if you're long-term bullish, you size smaller and give it time. 2, if you want to trade the event, you define your risk up front because you can be right on the business and wrong on the timing. 3, if you're unsure, you wait for the post-event reality check. Missing the first 10% move is not a tragedy. Quick cross-check with Rocket Lab, RKLB. And here's why I brought up RKLB at the top. Rocket Lab is one of the best execution names in space. When the market rotates out of the sector, it doesn't ask permission. RKLB can drop even while it's hitting missions and stacking contracts. So if you're building a space watch list, I like thinking in a barbell. ASTS equals direct-to-device constellation upside, RKLB equals launch and space systems execution and defense responsiveness. Different business models, same sector flow risk. 8:30 to 10 minutes, risks, wrap, CTA, and final disclaimer. Let's close with risks because this is where people get wrecked. Risk number 1, timeline risk. Imminent is not a date. Launch schedules move, manufacturing ramps slip, and markets hate uncertainty. Risk 2, technical performance risk. Even if BlueBird 11 launches, what matters is on-orbit performance, deployment, connectivity, throughput, reliability. A single weak update can hit the stock hard. Risk 3, capital or funding risk. Building a constellation is expensive. Even with incentives and partnerships, the market will constantly ask, how do they fund the next phase? Risk 4, sector rotation risk. Even if ASTS executes, a heavy rotation into or out of SPX can temporarily dominate price action. That's not fun, but it's the game. All right, if you want my full watch list approach for space stocks in the SPX era, hit subscribe. And if you want more breakdowns like this, follow Launch Money TV. Final disclaimer, nothing in this video is financial advice. This is for educational and entertainment purposes only.